Hello everyone, good morning and welcome to my morning report on Wednesday the 20th of July with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively sort of mixed trading open really on the European session. Equity markets are mildly higher, but what you have got at the moment is this US dollar, which is starting to break higher. It sort of broke out yesterday and is continuing today. Now that is impacting across markets, certainly across Forex. Today we're seeing all the Forex pairs, all the majors, underperforming the dollar. And I'll show you the impact of that on the euro, on sterling, and also Japanese yen in my chart appraisals in a bit. But that is certainly impacting also across the commodity prices as well. And you're seeing a slight sort of, in terms of the risk appetite, it's sort of stalling, I think, because equity markets yesterday on Wall Street started to sort of consolidate a little bit, and we saw initially a cautious open on Europe, and then mildly higher actually on the European equity markets. But I just think that these equity markets are in the process of starting to roll over, and that could be seen in possibly these treasury yields as well, starting to roll over as well. The 10-year slightly lower, and I think a factor in this is the oil price, which is now starting to sort of pull lower and pull away from that sort of old support band of 45.80, which had been trading around that for the last sort of week or so. But now yesterday it closed decisively below that, and it's testing this key 44.42 level, which is the near-term support. So I think that this is all sort of factoring into what is possibly going to be the return of a bit of a corrective phase on these equity markets. And it's interesting that it's sort of showing through in the Forex majors as well, which is starting to sort of be sold off against the dollar as well. So what have we got to look forward to today? Well, we've got the unemployment data for the UK, and let me just show you the list of data. Here we have the unemployment. 5% is the expectation there. Average weekly earnings, including bonuses, is actually expected to rise to 2.3%, and ex-bonus flat at 2.3%. So here's the unemployment data. Again, flat around 5% is the expectation there, and expected to slightly increase. Expected to sort of stay around 2.3% for the ex-bonus average weekly earnings, but as I said, including bonuses, it's a slight improvement to 2.3%. And then into the afternoon, we've got the crude oil stocks. Now that's expected to have another drawdown of 2 million barrels today. You've had drawdowns for the last several weeks actually, and it's expected to again happen to 2 million barrels around today. So that takes me to my chart of the day, which today is the Kiwi dollar. Now, I did the Aussie dollar yesterday, and we've been sort of looking at the fact that these commodity currencies, certainly the Kiwi and the Aussie, are starting to sort of factor in, I think, some sort of rate cut, which is the anticipation for the market really, because you had a move from the RBNZ yesterday to tighten the loan to value ratio on mortgages, and that's seen as a way of tightening up the housing market in front of a possible rate cut. So we had another decline yesterday. So you've seen this sort of sequence of lower or negative candles on the Kiwi, and again it looks like it's coming back towards the key breakout level, which is 69.60, which is an old resistance, and that became supportive. So a bit of a pivot band around 69.60, and it certainly looks as though it's coming back towards that. You've got these momentum indicators as well that on the RSI breaking to a 6-week low. MACD lines starting to gain traction in a correction, and also the stochastics also corrective. So these are all sort of pointing towards pressure on that key support. And I think that's what we're going to see. I think rallies are now being seen as a chance to sell. You've got the hourly chart, which I think shows you that as well, with the negative configuration on the RSI now. Failures around sort of the mid-50s area. Again, we've had a bit of a recovery this morning, but again, it seems to be rolling over. 69. So just get the 70.67, I think it was. Yep, to the pip. So 70.67 was the reaction high today, and that coincides with this reaction low here, 70.67, that we saw on Monday morning. So these are old sort of levels that do come back to be tested. Similar sort of situation that we saw on Monday with the breakdown, returning to this level around 71.20. Again, that's where the rally failed. So you're seeing these old levels being retested and then sold into. So I think that that's what we're going to be seeing again. I think you've got a nice band of resistance now between 70.80, which is that reaction low that we saw on the 6th of July, and up towards 71.25. So I think that rallies are a chance to sell on the Kiwi as these sort of hourly momentum indicators just unwind, and that's what you've seen in the hourly MACD lines and the RSI. So I think this could be a nice little chance to get short again on the Kiwi, and for a test of this 69.60 support. So that's my expectation on the Kiwi, and if you break that 69.60, you're sort of then looking at the next pivot line, which is this red one, which comes in around sort of 68.20, and it could also be that a break of the 69.60 level would complete a top pattern as well. So lots of reasons why 69.60 I think will come under pressure. Whether it breaks or not to the downside remains to be seen, but I think it will be tested. So I wish you good luck in your trading today, and I will speak to you later. Thank you.